Manoj, let me know when to start.
Yeah, let's start because it's already 4:10. Just make me the co-host, so I'll just share my PPT.
Yeah, I have made you the co-host. You
Okay.
please
All
check
right, we will
once.
start. Yeah, let's start. Go.
Okay. So, good evening, ladies and gentlemen. So, we welcome you all for the rollover analysis report. So, we have with us Mr. Gaurav and Mr. Manoj to take you through the session. So, over to you, Manoj.
Yeah, thanks, Komal, and a very good evening to everyone, and welcome to this monthly rollover webinar that we have. So let's see what we did last month and how things panned out. So last month also, if you remember, the webinar was made up of what is the view that we have on the index, how are the FIR positioning there, and what is the expected range that we have for this month, and then the stock of the month, which is actually a delivery based or a cash positional trade that we recommend. So I guess last month we had Coal India, and the month before that it was Ambuja Cement. So both the stocks have done good. At least an average of 4 to 6% is what we have got in the cash positioning. So this can be recommended. Even there are a lot of clients which get involved into MTF activation also and trades like that. So the same thing can be used for that. Now going with the index part, which we start first. First is the Nifty. If you see, we simply do an objective comparison analysis as to what the last month has been and how the position might shape up for this month of October series. So one way of understanding this, yeah, I'll try to use Hindi and English both. पर यहाँ पे position ऐसा है कि last month में निफ्टी कितने ओपन इंटरेस्ट से या कितने पोजीशन से स्टार्ट हुआ, उसे हम इस मंथ से कंपेयर करते हैं, और अगर वी ट्राई टू सी कि यहाँ से वो ट्रेड उसी डायरेक्शन में होता है या वो अपोज होता है. सो द फर्स्ट थिंग दैट वी सी इज लास्ट मंथ, दैट इज September, when we started, the Nifty had a position of 1 crore 6 lakhs, and today, this morning, when we started the October series, it is roughly around 2 lakhs less, around 104. So the quantum of deficit is not much, but then the biggest thing that we know is last month, that is the September series, the Nifty gained around 300 320 odd points, though intra month the Nifty was almost 1,000 points positive. So even on the FI desk, the foreign institution investor that we usually track as a data point, they are short by 70% into the index futures. Ideally, if you remember last month, they were almost at 50%. So 50 long and 50 short is where we started the September series. And now this time into October series, we are starting with a cautious note. The FIs have done a lot of short positioning into the Nifty futures, precisely more, if not the bank Nifty. And we have seen the position being rolled into the October series. So 19,900 roughly, that is the weighted average or the price at which the short rollovers has happened. So we believe that that might be the first resistance for Nifty. Now, the volatility index, or the implied volatility of options at the money options of in the money options is was usually around 9.8 to 10 odd, which the VIX is now at almost 12.5. So there is an indication that some nervousness has come in because of the put buying that we have. So 650 to 700 odd points, यानी 700 650 से 700 पॉइंट का रेंज निफ्टी का अक्टूबर सीरीज में हो सकता है. सो व्हाट वी फील इज अक्टूबर सीरीज जो 26 अक्टूबर को एक्सपायरी है, उसका मैक्सिमम पोजीशनिंग जो होगा वो हो सकता है 20,000 और 19,300. तो ये 700 पॉइंट हो सकता है निफ्टी का रेंज मैक्सिमम टाइम अक्टूबर के सीरीज में. Now, the second derivative instrument, which is an index option, because a lot of options selling that happened starting of the month, and even during the last 2 days of a weekly expiry. So for this month, we are seeing the highest put is at 19,500 and we have the highest call writing at 20,000. So roughly this 500 odd points is where, at least on the option side, the monthly side, which is dictating. So the first point, Nifty might be is in a sell on rise, and that rise is 19,900. What it means is, if the Nifty bounces, like today the Nifty bounced a good 150, 160 odd points. So in such scenario, when the Nifty bounces positionally in October series towards 19,900, we might see the pressure come in, or maybe frequent shorting to come in, or a profit booking of this bounce to happen. And on the flip side, downside, when the Nifty slides more towards the 19,300, that is where we might see profit booking by short positions or long positions being made in the Nifty. So this is the 700 points that we are expecting the Nifty might trade in. Stock specific, Crompton, GNFC and Granules along with NTPC would be the stocks that we expect might outperform the October series in the index. Now, what we mean by outperformance is, obviously if the index is up by 2%, we are expecting it to at least be 2%. On the flip side, if the index is down by 2 to 3 odd percent, the stock might not really fall more than a 2 to 3%. That is what the inference can be done. Now, Bank Nifty is a must instrument or a future that we need to understand, because it works so much in tandem with the Nifty that it usually dictates the trend in the Nifty. So Bank Nifty roughly also there was good amount of short positions, and when we started the series, yeah, just give me a moment here, 1 second. Yeah, so getting into the Bank Nifty, we started the October series with a 23.8 lakhs versus a 25 lakhs. So Bank Nifty perpetual for the month of September did not outperform or underperform much. But then the profit booking, but if you also remember, the Bank Nifty has also not made a new high when the Nifty did that. So it has been a lackluster session and the participation has been a bit less. So that can be seen in the October series as well. You see almost a good 2 odd lakhs of lesser position is there. And in just to add to this, even on today, if you see intraday, I guess more than 4 to 6% has been shed because of short covering of that 400 point bounce that we have seen. So even on the Bank Nifty, now we believe that levels of 45,000 or to 45,200 that might act as some resistance, and 43,800 becomes a good support. Options specifically, if you see for the month end, even 46,000 strike call has got the highest open interest, and that is followed by the 44,500. So this 1,500 odd points is where the option data suggests that the Bank Nifty might be trading in. So to underline on this index, Bank Nifty also might be in sell on rise, like today we saw the short covering come in, and levels of somewhere close to 45,400 might be the first resistance. The support for the Bank Nifty is closer to 43,800. The option data suggests that it might be more or less in the 1,500 points range, which is a 44,500 to a 46,000. Now, this is an October series index option position that we see. But in the short term, we know that it's a truncated week that we have next week starting. So obviously with the Bank Nifty expiry starting from Wednesday, which is the weekly expiry, so we might see a lot of call writing happening even in today's trade at 45,000. So at least for the October series, the resistance is a bit up at 800, 900 more points, 46,000. But in the short term, at least for the week, we are expecting a 45,500 to be the resistance. Now, if you see sector wise, the most important thing, we just try to compare what is the net position which every sector has with respect to the last month. Now, the concept of market-wide open interest position is simple, that every sector has a certain weightage and it caters, and it is usually in tandem to its previous week. For example, let's say if cement in the entire derivative basket, equity derivative basket, has a weightage of 5%, That is, all the FNO cement stocks of October future would be equivalent to 5% of all the stock position which is there in the October series. And if the cement continues a rally and we see this position going up, so that is when we imply that there is a possibility that there is positivity and the cement as a sector might again garner more upside. So we usually compare the net open interest month on month. So if you see banking, at least in terms of rollover, it has been highest. So it is 95.2. This is the entire banking stocks that we're talking about. Media would not be much one, and then the textile. But if you just look into the right hand side downside, the change in open interest wise, so if you see power as a sector has seen 4% of additional open interest. This is with respect to last month. So from September to October, power as a sector has 4% in the net more position from September to October. And there are a couple of stocks also that we feel might outperform. So likewise, if you see power as a sector, we have seen some in the banking, capital goods, media, and some in the metals also. But more or less, we do not attribute much to a directional trade in this, because there is a possibility of some short rolls also happening. Because if the September series was in a positive month, more than a 500-600 odd points, and even in the October series we had seen a fresh position, that is renewed position, we might cater to this. So as of now, the Nifty might be into a range bound session, but the index management, or so-called, if we might say that, it might be carried out with sectors like the power sector, some from the banking, and some from the infrastructure and media. So this is what we imply from this understanding. Now we have boiled down to 4 stocks, wherein I'll pass it on to Gaurav, who will give us more detail on the 4 stocks.
Thank you, sir. So hello everyone. So as usual, we have boiled down 4 stocks which we believe can do well. It's actually 3, because one is on the shorting side. So let's start. The thing is, since last 2 sessions, what we have been seeing is the stock specific action which is continuing in the markets amid fall in heavyweights. So first is GNFC. The stock lost marginally in September series, that is 1.5%, which used addition of open interest, which was 27%. The rollovers are good, that was at 97%. So on the basis of decent cash-based buying and substantial open interest addition, we believe it is poised for further lack of upmove. So if we see the price action as well, the stock has given a breakout above 600 odd levels and tested 660. And now the profit taking was on the lesser volumes. So we believe we only see it as a retest of a breakout. So be positive in GNFC from chemical space, keeping a stop loss at 570. The second stock that we have is Glenmark Pharma. The stock gained marginally in September series with open interest addition of 56%. The rolls have been good, but unfortunately today itself the stock moved up like anything, gaining 10% in intraday itself. So definitely risk reward is something that is not in favor at current levels. Look for dips to go long in Glenmark. Support would be at 760 in the stock. So pharma is something which we believe can do well, like Glenmark Pharma, Aurobindo Pharma, and Granules. Next stock from the list that we have is NTPC. The stock seen long rollovers, that is price increase that is complemented by rise in open interest, and that being rolled to a good quantum. The stock had surged vertically from 180 odd levels, and now after forming a fresh buying pivot around 230, it sets to looks to resume its upward journey. So we believe it's prudent to stay long in NTPC with a strict stop loss at 222. See, it's not necessary that everything is going northwards, will go northwards, but some of the names which would go down southwards as well. So as we have mentioned that it's a stock specific market, so we picked Asian Paints to have a bearish outlook. Since the stock attracted meaningful short formation around 3250 odd levels with decent cash based selling as well. So it's prudent to have a bearish outlook on Asian Paints. We believe it's poised to test 300 odd levels in the near term. So just to sum it up, we have three stocks on the long side. First is GNFC, second is Glenmark, third is NTPC, and Asian Paint is something that we are not bullish at. So have a bearish outlook. The stock can slide towards 300 odd level, 3000 odd levels. So yes, that is all from my side.
Yeah, thanks, Gaurav. So just to sum it up, guys, these are the four stocks which can be used even in your MTF activation for clients. So we necessarily mean that this stock should be bought into delivery buying, cash buying, and do not really get more into a stock futures also, because what happens with the stock future, there has to be a necessary stop loss. And at this point of time, rather than timing the trade of the market, it is a direction which we feel is more important. So even if the stocks have rallied, the same can be bought in the cash market because there is still more upside that we're expecting. So usually the first couple of days of the new contract, we see the traction happening, but then the stock usually keeps an uptrend going on. So stocks like GNFC, wherein we expect that the stop loss on the cash basis can be a 570. So the stock can be accumulated with 600 to 610 levels also in the cash market. Same with Glenmark, like you mentioned, Gaurav mentioned that the stock has rallied, but even though we believe that the stock has more potential, so the same can be garnered or bought even into the cash position on Tuesday. NTPC, most important, and one more stock like Power Grid, I would like to say, because from the power sector, these two stocks has rallied to a great quantum also, and NTPC, thankfully, even on the derivative side in the positioning stock, it has seen good. So NTPC is more of a stable stock. It's not really a volatile stock. The beta is quite stable. So what it means is even if the market corrects usually, and if we get positioning in the in a stock like NTPC, that can be a stable stock, a very prudent stock which can be used for maybe an MTF activation or cash positioning for the client. And again, like Gaurav mentioned that we are negative on Asian Paint. So if any client is holding Asian Paints on the stock futures as well, so keeping a prudent stop loss would be important at this point of time. Now, even though the Nifty has rallied a good 150, 180 odd points, like we mentioned that, that 70% of short position which the FIs have made into the October series, the base of that is closer to the 19,900 levels, and there is a potential downside which is a possibility of 19,300. So we try to get into a put ratio strategy where we do not really spend money on the premium, though there is a margin involved, but then there is no real loss into the strategy, and even the portfolio will be hedged. So this is one strategy. Even Tuesday, we recommend doing it, and we strictly recommend it for the month end expiry and not for the 5th October. So the strategy is you buy a 19,500 month end October put option. So the price might be around 120 to 130 odd. Let's say 166 is where we saw when we were doing on this. And you sell 19,150 put option, you sell twice the same amount. So the cost is actually zero. So what happens is you buy a put option at 160 rupees, you sell two of roughly 80 rupees. So the net cost is zero, though there would be a margin involved of, I guess, if I'm not mistaken, around 1 lakh, 1 lakh 12 odd thousand. But this would also facilitate and become a hedge for the portfolio that the client should be handling. Now the stop loss here would be 18,650, because when we sell more options than we buy, there is a risk which is always there. So in this case, we have bought one put option of 19,500 and we have sold more than one put option of 19,150. So we would recommend keeping a stop loss. Now that stop loss is a good almost 1,000 odd points, on the downside 18,650. And this, if the Nifty starts drifting down and the portfolio starts to shed the potential money that it has, then obviously this can be a good beta strategy that can be done. The target that we are expecting is around 150. So if I have to just sum it up, the view that we have is Nifty can garner more short covering, and towards 19,900, the potential or the push of shorting might again come in. For the Bank Nifty, for the weekly expiry, that might be closer to 45,400. For the monthly October future series, it might be closer to 46,000, where we expect some pressure might come in. Sector specific, we believe that power, capital goods, media, metals, and bankings have seen some more position with respect to last month. So we expect these sectors to do good. Stock specific, GNFC at 602, Glenmark at 790, and NTPC at 245 would be the top pick that we advocate at this point of time, wherein we are expecting the position might be taken more into the cash based delivery and not really stock futures, and there is good potential upside of at least a 4 to 8% more on these stocks. And in the portfolio that the clients are holding from the September to October series, whatever stock futures and the cash positioning has been made, it is prudent to get into this strategy where you buy one month end 19,500 put option for 160 odd rupees, and you sell to 19,150 strike put option. So net the cost is zero on that, and the stop loss on the spot basis would be almost 18,650, and we're expecting a target close to 150 odd rupees. So this would be the basic view that we have on the index, followed by the stock picks. So guys, if you all have any query pertaining to this specifically, kindly write it on the chat. We'll be more than happy to assist you. So guys, if there are any query on this, kindly send us a chat. I'll take one question that we have. What about the metal sector in the October series? So to answer, the metal sector might be positively biased. We are not negative on the metal sector because, as I was mentioning, it was almost, I guess, June to July series when the metal net market-wide positioning was hardly 3.5%. That went up to 4.75 to 5%. So we're expecting the follow-up buying to come in. So metals would be positive. Stock specifically, we believe that Tata Steel and Hindalco might be still be the top picks in the metal sector. Okay, we have a next question from Mr. AR, asked about view on engineering sector and bearing sector. So now, precisely FNO, at least on the derivative side, we did not have this bifurcation into engineering sector and a bearing sector. But then overall, if you see, at least if I have to put stock specific, the top three stocks that we mentioned would be positively biased. And sector wise, capital goods, yes, there can be a couple of stocks like BHEL in the capital goods, and Voltas, I guess, can do good. But stock specific from the bearing sector, we would not recommend any at this point of time. Again, guys, stock specific view, you can send us a mail wherein we'll let you know, because this would not be a stock specific view as to something from the index or how the portfolio hedging or positioning can be done. We look into this. Okay, so we have a next question. Thank you, it's very helpful. What about the auto sector and IT sector? Now, IT, we need to say that last month, almost September to November, that was the month when IT sector bottomed out. We believe that IT sector might not be negative, but we would not see an outperformance. So what it means is the weightage of IT that is there in the Nifty, we might see the same coming in. So stocks like HCL Tech, TCS, and Infosys, obviously the three big stocks that are still positive. The cash positions in this should be kept because we believe there is a good at least 18 to 20 odd, at least in a quarter's time, which we might see in these stocks. Okay, so I have a next question. Please repeat the stop loss. So guys, this report is there in everyone's inbox. Kindly open the report, which was sent, I guess, around 11 to 12, which has all the things in detail. Now, Glenmark, fortunately or unfortunately, rallied a lot, but still, because see, the stock clearly had an outperformance, the presence of buying was still there. So we still expect the stock to go up. So at least on the levels that we recommended, any dip towards that level can still be used to go long in that. Now we have a question from Mr. Vimal Roy asking what is the ideal PE to buy railway stock. Now, unfortunately, I would not be able to comment on the fundamental part of it. So please send us a mail wherein we have a team headed by Nirvi who will be more than happy to give you the PE ratings for such a railway sector stock in case that is seen for investment. So guys, if you have we have a query even on sugar sector. So like I was mentioning, we are not really expecting much outperformance because sugar stocks have done exceptionally good. So carry on trade or a follow-up trade with respect to Nifty or the index might go on. So an higher outperformance we are not expecting because this month we are starting on a cautious note with a shorter position, and the Nifty might be more range bound session. See, the when the result season starts, the market might take cues from there, and that might dictate the next trend. So usually the first fortnight or the first 10 days of the new series would go into the understanding or to look into the cues that is being drawn from the result session, and then the market might catch a trend. So as of now, we expect the Nifty to be range bound. So guys, again, stock specific like Tata Power, please send us a mail. We'll be more than happy to send you the levels on that. So any stock specific or sector specific or on the index or on hedging portfolio or volatility index, any doubt that we have on derivatives, kindly let us know. We'll wait for a few more minutes, guys. So any query, please send us a chat. Okay, we have another query from Mr. AR who says that to ask that to make a new position in any stock, how much percentage does any stock correct from their high to get it at a correct level? See, the simple understanding to this is, see, now I'm assuming this is an FNO stock and not really a cash position stock. So the better thing to do this, when you see a month on month, see, this is simple statistic. Generally, a stock rallies or falls down around 3 to 4%. This is the general beta composition that we have. So even the stocks which rally a 10% up and a 20% down would not cater much or be in an FNO derivative for much long. So on an average, 4% is where the stock rallies month on month or it corrects the month on month in a 12 months period. Because see, if you look into the nature of market, the Nifty rallies for a good 4 to 5 months and the next 7 months is a consolidation phase. So every time we see a delivery based buying. So for this example, like even stocks like Glenmark, the average that we saw last month is obviously the base. So couple of examples, like if you see stocks like Tata Steel 116, 118, that is been a level where the position has come in and the stock goes to 130. So if I have to say at least 2% from the month's high, when we see that happening, that correction, that is usually a good time to enter. Now what I mean is the monthly view, not really the 2% in terms of the day. So if a stock, let's say an NTPC has rallied 4% in last month of September series, the 2% of NTPC, this is just a statistical understanding, is usually the weighted average price or the base of accumulation. So that acts as a support. Again, stock specific Vedanta, I can see, please send us a mail. We'll reply on that. So guys, any derivative positioning or index specific question we have, to let us know. All right, guys. So if there are no queries, we can call this webinar. Again, feel free to write us a mail in case if there are any query. The same is there in the inbox. Please open it up. You can go through all the stock specific and the strategies that we have. If there are any queries, please send us a mail on equityresearch@religate.com. Thank you so much for joining in, everyone. Have a great weekend.